All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We have about 12 minutes until we can go take a look at the challenge automation here. But jumping on just a little bit early, very interesting morning in the market here today. And you don't often see days like today. But when you do, it's generally during earnings season. And what do I mean? Well, the Dow is down 233 points, right? That's a pretty big drop in the Dow today. The NASDAQ or the Qs, they're green, at least for the moment, right? You look at small caps, they're down big, 1.34%. And then you look at large caps, the SPY, they're down 0.4%. So just a little bit down. So we have some real disparity in the indexes. When do we see that? We see that generally during earnings season. And when you get different sectors just doing different things. And that's what we have out there today. Microsoft after the bell yesterday, really good earnings report. Fantastic earnings report. I made the comment this morning in the feed, just a brief comment, that it's a very interesting place where Microsoft is gapping because it's going to give it a $1 trillion market cap. Now, the only other company, Apple, Amazon came close. I don't think it ever hit it, but the only one that ever hit it was Apple, and then, went on this sustained, heavy drop before, some of the rebound now. But this now makes Microsoft the largest market cap company, that the market has. And, our valuation's going to be justified at these levels, right? And that's a whole different conversation. That's a conversation we're going to have. I'm very interested to see how it reacts here today. I do think this could be one of those really good news top scenarios, not one of those, it's just, ready to go, breaking out, off it rolls. I think this could be very easily a good news top here for Microsoft. But we will take a closer look at Microsoft a little bit later today. If we go and we look at, we look at kind of where Microsoft's earnings are or where they came in at, you can see the earnings beat, right? The picture here, the earnings beat. And then on the more important side, nice revenue beat. And this kind of year-over-year, quarter-over-quarter revenue growth story that is continuing, right? But you look outside of Microsoft, and Facebook has some of this. It is helping to drive things. But here's Facebook, beat on earnings, beat on revenue, or slight miss on revenues, but within expectations. And they have that revenue growth train. This kind of this Visa look, right? So pretty good out of them. But then you start to get into some of the others. And some of the really economically sensitive stocks that are out there. The biggest headline out there is Triple M. They missed on their earnings, and they missed bad. They missed by over 10%. For a Dow stock, it's not all that uncommon to see. We do see it every once in a while, but that's a pretty big miss. But more importantly, they've had earnings misses before, but their revenue miss. And this is 2 out of the last 3 quarters with a monster revenue miss out of Triple M. And the stock is getting absolutely pulverized here this morning, and rightfully so. Pushing down below 200. You have the CEO kind of just talking and saying, "Look, we just didn't get what we wanted." Still talking that the economy is strong, which I thought was really interesting. They kind of blamed the slowdown on the economy or their numbers on the economy, and then turned around and said the economy's strong. Which is, what they're doing there. But rightful gap down. This isn't in line with what we saw out of Honeywell. This isn't in line with what we saw out of UTX. right? We saw different earnings reports out of Honeywell and UTX. Triple M, this looks like a Triple M issue more than a a sectoral issue. If you look at all three of these combined. But if we start to go further, right? We talked about Caterpillar yesterday. We talked about the miners and how kind of Caterpillar's read-through for the miners like BHP and Rio wasn't very good. Well, here we have FCX, miner, reporting today. Earnings, missed on earnings. Revenue came in, missed on revenue expectations. And the stock rightfully, getting pummeled here this morning, down almost 10% here on that earnings report. And, we're looking and seeing continued slowdown. This isn't a new slowdown story. This is kind of a slowdown story that's already started and kind of getting worse here for FCX. You say, well, it's FCX. FCX has history of being quite erratic, right? Well, let's go to UPS because we saw FedEx. We saw FedEx earnings about a month and a half ago. And FedEx missed on earnings, they missed on revenue, and we saw the stock rightfully gap down. And then the stock decided to go on this blitz higher. And I made several comments during this run. Yes, the chart has turned bullish, but this is ridiculous given what the earnings are. This is the type of report, this is the type of earnings where the stock should be pushing into new lows, not turning it around and rallying. But the market was such that, look, even garbage got bought up. Well, today we have UPS earnings. And UPS came out and had the exact same earnings report as FedEx. And it's not pretty. It is definitely not pretty. They missed on earnings. They missed on revenues, I believe to a greater percentage than FedEx. I'll have to double check that. But they missed on earnings, missed on revenues, guidance a little bit light, and rightfully getting hit. And we're seeing FedEx get hit here on that. So, when you look at, yes, Microsoft, and right, as goes tech, so has gone this market. But outside of tech, the earnings reports aren't pretty. This is the first day where we can look at the earnings reports and go, wow, these earnings reports give the bears a lot of fodder. They give the bears a lot of good arguments out there. The only argument that, kind of can be swept under the rug is Triple M. Because bulls can say, hey, look at Honeywell, look at UTX. Those were pretty solid reports. Triple M, all right, there's an execution error with Triple M and, not really indicative of the sector or the market. When it comes to FCX and UPS, that can't be said. That can't be argued. It does look a lot more sectoral there in terms of, what's happening and how it is, how it is flowing. So, anyway, those are some of the big earners that we have seen here so far. Some other earnings of note, Visa. Visa here with another beat on earnings, right? They always beat on earnings, right? And then revenue, beat on revenue just a little bit, and they always beat on revenue. So it's the same bullish story here for Visa. Stock pulling back a little this morning, last I saw, but it's one of those where there's no real bearish argument in the story here. Will Visa ultimately have a pullback someday, eventually? Yeah, it will. Will it hit a new high this quarter? It hits a new high every quarter. So, since its IPO, it's hit a new high, I believe, every single quarter now. Since its IPO, it was able to come in here, I believe, in March and hit a new high. No, just shy. So very close here in Q1, but definitely has managed to do so in Q2. We saw Valero earnings, and Valero's stock has kind of been all over the place the last few days. And, we've seen the stock slowly get kind of bought up a little bit here. Yeah, looking at it, I don't think there's anything too special when it comes to the earnings. I have not gone through them in depth like some of the others, but you can see they beat on the earnings expectation number. You can see the revenue number. Just a pretty skewed here. This chart doesn't reflect what is there or what happened. They got their decimal point wrong, but so this isn't this is a data error, not an earnings error. But nothing too dramatic. There with Valero. If we come back here and look at some of the others that have reported here this morning, Comcast, that's not going to be a market mover. Altria, not going to be a market mover. Southwest Airlines, not really. Hershey, definitely not a market mover, though a decent report out of Hershey, I should say. And so anyway, that's what we see from an earnings standpoint here this morning. After the bell here today, we're going to have Amazon, Intel, Starbucks. Those are big reports, right? Those are big. Those are three big reports in terms of market mood and market sentiment. So they will be on tap here this afternoon. And, anytime Amazon reports earnings, if you're in Target or you're in Walmart or you're in UPS or, Home Depot or any stock that, Amazon could ultimately affect, there's some serious gap risk that is associated there. All right. Okay, bear with me for 30 seconds. Let me run the report, see if there are any signals out there. I know there were some that were very close, but let me grab that here. All right. My apologies. I was just grabbing that. No new signal here this morning. There are some that are very close, and I'd be surprised if we don't get one by this afternoon. But we will see. But no new signal here this morning. Here with the algo, and that's. We're still on pace. Starting to fall a little bit behind pace with the signal, but with the market vibe, sitting at neutral. That. Not too surprised to see this. We have one position on the board, and that's Alibaba. Let's go take a look. Our exit level 184.39, price target level 195. Let's see if any of those are, being flirted with, and it's at 185.95. So no, not even close, right? It's $1.60 off its stop level, and it's got a ways to go to get to its profit level. So no decision to be made there. I know the stock, gapped down, sold off, rallied, was up almost $2, has sold off, and okay, great. It's just kind of stuck in this consolidation, and that to me was kind of, when I look at it, right, and I'm not staring at these, the decisions. There's no decision for me to make, but as I saw the price action yesterday, I just thought to myself, man, you know what, this just kind of increases that consolidation risk, to the nth degree here, and really almost puts it in a way where Amazon is going to drive it, where earnings out of Amazon will drive it, still within that 3-day period, so the auto exit date is tomorrow evening or tomorrow afternoon session, so nothing to change, nothing to adjust, there with that. Okay. Now, personally, I did go out and make a trade here this morning, and that trade was on FedEx, and it was a put trade on FedEx. And, the stock has moved, quite a bit here since, so it's a little bit of a different risk reward here. But I think if you're bearish, right, if you're bearish and you start to look and you say, you know what, right now everyone's bullish, this market's Teflon, everything just falling off, eventually that's going to change, and you want to make a bet that that's going to start to change now. I think FedEx is one of the better areas to do that because their earnings do not justify the rally that happened. We now have the UPS earnings that have come in to basically say, hey, what FedEx went through is not a one-off. It's not it's not one of those things that is just going to be 1 or 2 quarters and it's going to go away. It's persistent, it's systemic, and it's going to continue over time. And you look at FedEx, it's nowhere near its highs. We have markets sitting up near new highs. FedEx not even close, it's to me it's one where if you're gonna make a bearish bet out there, just one of the better ones, to take a look at. But I'm very curious in the price action of Microsoft today, and if it can hold. And I don't think that today is going to, say everything about it. But if Microsoft, let's just say, were to close right here, and it's going to close here on big volume, there'll be some big volume by the end of the day. This almost, and I shouldn't make this comparison because fundamentally they're nothing the same, right? But we got into this euphoric stage in the market back in 2007, 2008. And let me pull it up because this is the first trade my younger brother ever made, and we still kind of laugh about it because I looked at him like he was nuts on that day, and he was like, "Nope, I got this." But it was Chesapeake Energy, and sorry, it got the 2007. Let's go 2008. It was Chesapeake Energy, and Chesapeake had been on this monster run, just absolute monster run, and then came out with some really good news, really good report. Everything's sunny, everything roses, pushes into a new high. Things are going to be great, grand, and wonderful. And there were just no more buyers. There were just no more buyers, right? And this is before the Lehman Brothers, right? This is before Lehman Brothers. So the stock, pulled back sharply here in July and in August. Lehman didn't happen until September. And yes, ultimately Chesapeake went down with that bear market, but you could just see how much it pulled back, as the buyers were kind of just left stranded up here, and how much it pulled back there in the short run. And I don't think Microsoft's going to have the same type of percentage move, but I think this principle is a risk factor here for Microsoft, and one that there's no confirmation of that yet, and it's not something I'm going to go in position in here yet. But we start to, let's just say it were to close here, close up at 130. We start to see it break some of the lows for today, in the days to come. I think that's going to put investors on edge, and create some nervousness out there, in fund managers. And so one of the stocks that I'm watching the closest here. Now I mentioned I would talk about its fundamentals just a little bit more here, and take a look at them. And if you come in, we'll come into Y charts to do this. Let's just bring it up with Microsoft. Why is Microsoft taking off? Why has it gone up over the last while? Over the last several years, growth in revenue, right? It is turned its revenue story around. They have made some major changes, and their revenues have just skyrocketed, right? I mean, in 2010, this is a $56 billion revenue a year company. They're now $118 billion. Right? I mean, they just for this big of company to grow revenues the way they have grown revenues, it's just remarkable. And some of the changes they've made in getting out of some of this Internet Explorer and and standalone desktop computers, the changes they've made are just absolutely remarkable, and they deserve the run in the stock that they've had. When you start to come in to look at valuations, right, and whenever you look at valuations on tech stocks, it's always a little bit different, right? Because PE ratio, does it really mean a whole lot? No, it doesn't. it really just doesn't mean a hill of beans, right? But for some stocks, price to sales becomes a very interesting ratio. It's something that investors will pay close attention to. But price to sales, I mean, this is a historic all-time high here for Microsoft, right? Since the dot-com crash, right? So you can see how high they paid price to sales. So investors didn't care during the dot-com, era. But, in terms of the last 10 years, this is the highest price to sales that it's ever been. Price to book, price of the stock relative to book value, it's the highest price to book that it's had since 2007. So it's getting into some of the expensive area, and it's getting into that area where it doesn't have a lot of room for error. Meaning, if it starts to show some flaws, investors are going to sell it pretty quickly. But here's the thing: it's not showing flaws. It's not showing. It's not showing anything to say, hey, you know what? Things aren't going to get better from here, right? It is something where, let me pull up margin here. But you look at this across the board, their margins have been pretty stable, right? But over the last couple years, they've been growing revenue and growing margins, right? And you have that combination, and that is a combination in tech that you just don't see get sold off. You see that combination get bought up, and so while, yes, they're expensive, yes, they have some very stretched valuations, they don't have some of those key components that would suggest it's ready to get sold off and sold off aggressively. So, when I look at it, I look at it in a very neutral Microsoft right here. This isn't something that I want to be a buyer of long term, not something I want to be shorting short term. But I do think it is something that could have, kind of this windfall down if we see a few things kind of stack up here with it. But it's still, too early. It's too early to tell. It's definitely not a UPS story. It's definitely not a Caterpillar story or an FCX story. It's very different from those stories. And, we continue to kind of see this in the market where you have tech and then you have the rest, right? You have tech, and then you have the rest, and they're very different stories, very different earnings, and just almost two different markets right now. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.